So I'd like to welcome Daniel Mazzola. He is a certified professional finance financer, and I'm going to turn the floor over to Daniel. Thank you.
Thank you very much, Denise. That's quite an introduction. I hope I live up to your expectations. My name is Daniel Mazzola. Very happy to be here. Tonight's presentation is Financial Repercussions of COVID-19. We're going to talk about the stimulus payments, some of the easement of debt obligations, and just some financial fitness tips that I think are extremely important at this current time. This is my information. I'm a CFA and a CPA. I'm based in Massapequa. Here's my telephone number, my website, and my email address. I encourage everyone in the audience to reach out to me directly. If you have questions, if I covered something a little too quickly tonight, please feel free to reach out to me directly. Massapequa is not too far from Port Washington, believe it or not, so it's very easy for us to communicate or get together, and I encourage people to do so. All right, so let's begin. First off, we want to start off with the tax filing. They have extended the tax filing deadline. Normally, your tax returns have to be filed and submitted to the IRS by April 15th. This year, because of the COVID-19, the IRS has extended that date to July the 15th. So you have until July 15th to file your returns and also pay the income taxes. There's no limit on the amount of the tax payment. So it's not as if you only owe a certain amount. If you owe more than that amount, you have to pay. Again, there's no limit on the amount of the tax payment that is postponed. For those people who make estimated payments, the first quarter estimated tax payment has also been deferred until July 15th. Normally, when you file an extension, in order to get an extension, you have to file a form with the IRS. There's no need to do that at this time. The extension has been granted automatically. So again, there's no need to file special paperwork or anything like that. The extension to file to July 15th has been done automatically. The IRS will not charge you any penalties or interest for filing later this year, July 15th. And it's important to note that if you do expect a refund, normally you get a refund, there's no reason to delay filing until July 15th. You should be filing now, all right? So again, if you expect a refund, normally you get a refund, you should file now. Why? There's no reason why you should have to delay, wait 3 months to get that refund. So I encourage people, if they owe taxes, certainly delay. July 15th gives you another 3 months control handling of that money. By the same token, if you are due a refund, if you expect a refund, you want to file now. You want to file as soon as possible to get that money. All right, so let's talk about the stimulus checks. Lots of questions about the stimulus checks. Still a lot of people who have not gotten their stimulus checks, others who have. Why haven't I got my stimulus checks? So let's go over that. First of all, stimulus checks represent direct payments to individuals. These are direct payments to individuals. If you're a single taxpayer filing singly, it's a $1,200 payment. If you're a married couple filing jointly, if that is your tax status, you receive $2,400, and you receive $500 for each child under the age of 17. Very important. I have that highlighted for a reason. Again, $500 extra for each child under the age of 17. These stimulus payments are not taxable. They are not taxable. You're not going to owe money on these stimulus payments. Anyone 17 or older claimed as a dependent by another filer will not receive a payment. So think high school students, college students, maybe parents who are living with you, any dependents who you can claim on your tax return. These dependents 17 and older will not receive a stimulus check. So in a way, it's kind of unfair, obviously, to those students, college students who are working at kind of jobs, probably second jobs where they have been laid off temporarily. And not only do they have to contend with that, but they do not get a stimulus payment, all right? So again, dependents, people who can be claimed as a dependent by another tax filer, 17 and older, will not receive a stimulus check. The stimulus checks phase out, okay? What this means is for every $100 over a taxpayer's adjusted gross income threshold, the payment is reduced by $5. Again, every $100 over the adjusted gross income that exceeds the threshold, the payment is reduced by $5. So let's go through some examples of this. These are the thresholds. So what that means for a single taxpayer, if his income is below $75,000, he will receive a full stimulus payment. If it's between $75,000 and $99,000, he gets reduced payment. And anything above 99,000, again, adjusted gross income, that person will not receive a stimulus payment. If a married couple's filing jointly, just double the numbers, take it times 2. So a married couple filing jointly with income, adjusted gross income below 150,000, they will receive a full stimulus payment. If it's adjusted gross income between 150 and 198, a reduced payment, and it's phased out completely for anything above 198,000. So let's look at examples. Single Steve has $80,000 in adjusted gross income. So you start off on the top with $1,200. 80,000 is adjusted gross income. It's reduced by 75,000. That's the lower threshold. The difference is 5,000 times 5% gives you $250, and the 250 reduces to 1,200 equals $950. Again, nothing fancy about this computation, not too difficult. You just start off with the stimulus payment on top. You have the adjusted gross income, the threshold, the difference times by 5%, and that's your reduction. So single Steve, adjusted gross income of $80,000 will receive $900 in stimulus payment. Steve and Sue, married couple filing jointly with a 10-year-old child and adjusted gross income of $175,000. So there you go. You start off with $1,200 for Steve, $1,200 for Sue, an extra $500 for the child. The total is $2,900. Take the adjusted gross income, subtract the lower threshold, the difference 5% equals $1,250. And the $1,250 reduces the $2,900 number up on top, and that's their stimulus payment, $1,650. Again, not too complicated a computation, really just to go through the steps. Step 1, what the stimulus payment is. Step 2, what the threshold is. Step 3, the reduction, and then you're all set. Again, not too difficult. The stimulus payment is based on either the 2019 or 2018 return. So you need to have filed a return to get the stimulus payment. So if you haven't filed for a couple of years, you want to make sure you file. I worked with a gentleman a few weeks ago, had not filed for 2018 nor 2019, wasn't getting a stimulus payment. So we had to kind of get him motivated to get those returns done. IRS will first look at the 2019 return for filing status, adjusted gross income, and number of children. So the IRS is going to look at the 2019 return first. If you haven't filed for 2019, they're going to look at the 2018 return. Social Security recipients who typically do not file don't have to file. So this is very important. If you're a Social Security recipient who doesn't file a tax return because your income is below the threshold that required a tax return, you don't have to file. You will automatically get the stimulus payment sent directly to the bank account that you're getting your Social Security payment sent to. All right. So people on Social Security don't have to do anything. Question becomes, should I file for 19? So maybe you haven't filed for 2019. You're taking advantage of that extended date, July the 15th. But if the result is better, you want to file for 2019. So I'll use an example. A couple who had a child, maybe in January, February of this year, they're due an extra $500 as a result of that child. They should be filing a 2019 return. They should file because they're going to get an extra $500 for that child, that baby that was just born. If the result is not better, however, you want to delay. So maybe you took a new job in 2018 that gives you a higher income that comes in above the threshold. If you file a 19 return with that higher income, maybe you don't get a stimulus payment at all, you get a reduced stimulus payment. So if that's a situation, you want to delay filing in 2019, let the IRS work only with the 2018 return that's already on hand, all right? So the question becomes, should I file? Depending on your circumstances, maybe, maybe not. All right, so when will I receive my stimulus payment? It's quite possible that people on the webinar tonight have already received their stimulus payments. If you have already received your stimulus payment, congratulations. There's a lot of people out there who haven't received it, all right? Taxpayers who have received, or in the past received direct tax refunds via direct deposit should see payment in mid-April, as IRS is your banking information, okay? So if you are a taxpayer for 2018, 2019 who received a tax refund via direct deposit, you may have already received your stimulus payment. If not, you should get it within the next few weeks. You don't have to do anything. The IRS has already received have your tax information, the direct bank information, on hand. So you don't have to do anything. You should be getting your check very, very shortly. All right, but there's a lot of people out there who either haven't received refunds via direct deposit, maybe they get that in a tangible check, who have filed, who owe money, or have not filed at all. As I mentioned, I just mentioned a few slides ago, a person who hasn't filed a tax return in a few years. Those people are going to have to wait for tangible checks. The tangible checks have already been sent out for people in a very low income level. So if you are in this situation and you don't want to wait, you want to go online to this website, irs.gov/coronavirus, enter your bank information. That way the IRS has your bank account information and you will get a stimulus check sent direct deposit. So I encourage all these people, again, anyone who doesn't normally get a refund because they owe taxes, or maybe they do get a refund, but it's sent to them by physical check, tangible check, or who haven't filed a tax return for whatever reason, go onto the website, type in your bank information, you'll get the stimulus payment much faster. Again, if the IRS does not have your bank information, there's a chance if you're a high income taxpayer at the high level, a higher threshold, you won't get your stimulus payment maybe till August or September. No reason to wait that long. All right, so we talked about the stimulus payments. Let's talk about some other revisions as part of the CARES Act. Required minimum distributions. People who are normally supposed to take an RMD from their IRA, 401k, or 403b, for 2020, this has been suspended, all right? So you do not have to take your required minimum distribution from an IRA, 401k, 403b for this year. There's no penalty. So by all means, unless you have to take that money because you need it to cover your daily expenses, you don't want to take your RMD. It's going to increase your tax bracket. Adjusted gross income has a lot of negative tax consequences. So by all means, if you don't need that money, don't take it. There are better places to take it from. Also, if you take money from an IRA account, normally if you take it out before the age of 59 and a half, you're going to have to pay a 10% penalty on those payouts. That has been waived this year for payouts up to $100,000. And in addition, any money withdrawn can be repaid over 3 years, or if you don't repay it, you can spread the tax liability over 3 years. So think about that money taken out of an IRA account, again, up to $100,000. There's no 10% penalty. If you want to repay it, think of it as a loan. You can pay it back over 3 years. And if you don't pay it, you're going to owe taxes on it. The tax liability is spread over 3 years. So the IRS, the federal government, is making it a lot easier for people to tap into their IRA accounts to cover expenses, to have some money they normally wouldn't able to get. Retirement accounts, some more revisions, loans from 401k. So if you have a 401k, normally you're only allowed to take the lesser of $50,000 or half of the account balance. They have raised that to lesser of $100,000 or 100% of the account balance. You can take out your entire balance from a 401k as long as it's below $100,000. If you have an existing loan, the repayments on those loans are suspended for the rest of the year. Okay, so if you have a loan from your 401k, you can suspend those repayments for the rest of this year and also part of next year. Again, suspended for 1 year. So there's 3 revisions to retirement accounts. Make sure you're aware of these. Take advantage of these. All right, these are very important, especially the RMD. I would postpone that as much as I can because that has very negative tax consequences. All right, we'll talk about IRAs. The IRA pay-in date has been extended. We talked about the tax filing date. That's been extended. Contributions for 2019 IRAs, normally you would have had to make that by April 15th. You can now make that till July 15th, okay? The maximum contribution for an IRA this year is $6,000 plus an additional $1,000 for people over the age of 50, all right? So if you were 50 as of December of last year, you can put in another $1,000 into your IRA. So these contributions can be made for last year, 2019, anytime before July 15th. Okay, so if you haven't made an IRA contribution for 2019 and you're eligible to do so, you want to do that. You want to take advantage of the tax breaks the government is giving you. If you're in a position to fund 2019 and 2020 now, then I would do so. You want to take advantage of the fact that the stock market is down. Take advantage of that. Make the contribution for both 19 and 20. Get that money working for you. There's no reason to delay the 20 contribution if the money is available. Tax planning involves more than filing early to secure a quick refund. It means the utilization of all credits, deductions, and adjustments available. Objectives should be to minimize both the current and future tax liabilities. All right, so that's what tax planning is. A lot of people use their accountant because he files their return quickly. That's not a good reason to use an accountant. An accountant should be working with you to make sure that you are taking advantage of all the credits, deductions, and adjustments are available. And I'll go talk about that IRA. We just talked about that. Take advantage of that. Also, you should be thinking about doing Roth conversions this year. Roth conversion is taking money from a traditional IRA, converting it into a Roth. Maybe this year you're in a lower tax bracket because of a job situation or other circumstances. Thinking about converting from money from a traditional IRA to a Roth, now's the time to do it. That's what tax planning is all about, taking advantage of the situation. A Roth conversion makes sense if you have the cash to meet the tax liability. You are going to have a tax liability if you convert a Roth. So if you have the cash on hand to meet that tax liability, makes a lot of sense. Distribution from Roth IRAs are tax-free and there's no required minimum distribution. That's why you want to have a Roth IRA as opposed to a traditional. And if you intend to leave the money to children, then you want to do the Roth conversion. Why? Because those children will inherit that money tax-free. All right, so these are tax tips, tax planning. Let's talk about unemployment insurance. Unemployment is a state-run program. It's not a federal-run program like Social Security. Unemployment is a state-run program. In New York State, the maximum benefit is $500 per week, and it lasts 26 weeks. Minimum benefit is $182. The CARES Act, which is the legislation that the federal government passed in order to help people through the crisis, the CARES Act raises the unemployment amount by $600 per week and extends it by another 13 weeks. So if you're currently collecting the maximum unemployment benefit in New York, $500, this $600 is going to be added to that. You're going to get $1,104 per unemployment per week, and this lasts until the end of July. Normal 1 week waiting period and proof of job seeking is waived. Okay, so it's normally when you apply for unemployment in New York State, you have to wait a week by the time you leave the job till the time you apply for unemployment. And then you also have to prove that you're looking for a new job. Both those requirements have been waived. Unemployment has been expanded to include self-employed people and also gig workers. Those are Uber drivers and things like that. Benefits are taxable. So if you do collect unemployment, those benefits are taxable. It's important to note that if you have exhausted the New York State unemployment benefits, you should still apply for the $600 federal benefit. So it's possible that at some point in the future, in the near future, you'll exhaust the New York benefits. No reason why you still shouldn't apply for the federal benefit. Okay, now I've heard a lot from people who have had a lot of trouble, very difficult to get through the unemployment. The offices are closed. The phone lines are jammed with people. They're overwhelmed with people asking for help, asking for unemployment. The best suggestion I can make is just be patient. Try, every day, go on to the website, try to unemployment. Again, it's not going to be easy. Consider the situation. The best advice I can give you is to be patient. Go on at least every day, maybe go on 2 or 3 days if you have to. All right, but be patient. The money's there. Again, make sure that you get it. Student loans, the CARES Act suspends loan payments for 6 months on loans headed by the Department of Education. Okay, so these are loan payments that are loans held by the Department of Education. This is about 3/4 of the loans out there, student loans. 3/4 have been issued by the Department of Education, U.S. Department of Education. No interest will accrue on these student loans while the loan payments are repaid, and the suspension is automatic. So unlike unemployment or the stimulus payments where you don't have a refund, you don't have to do anything. These student loan suspensions are automatic. There's nothing that you have to do to suspend your student loan repayment. Okay, so I'm sorry. Let's talk about mortgages. All right, under the CARES Act, homeowners whose loans were issued by the federal government are allowed to suspend the monthly payments for 12 months. All missed payments and interest are due when the forbearance period ends. Okay, so you don't have to make loan payments for 12 months. These are loans issued by the federal government. These are not private loans, private mortgages. These are loans issued by Fannie Mae, Freddie Mac, issued by the federal government. There's no loan payments for 12 months. At the end of that 12-month period, however, you're going to have to make up those payments. Both the payments and the interest are due when the forbearance period ends. You want to contact your mortgage servicer to determine who owns a loan. So if you don't know whether it's a government loan or a private loan, contact the mortgage servicer, whoever holds the mortgage, whoever sends you those monthly bills, contact them to see who owns the loan. Is it government, is it private issue? That's very important. If you are able to continue the loan payments, keep doing so. All right, so if you're in a position where you can continue to make student loan payments, I would advise you to do so. Keep making them if you can. All right. Foreclosures and evictions suspended for 60 days for homeowners whose loans were issued by the federal government. So it's very important to distinguish between homeowners whose loans are held by the federal government and whose loans are not. You want to contact that mortgage servicer to determine whether or not it's a federal government loan. No late fees, no reporting to credit bureaus. Okay, again, these are federal government loans. If the loan is not issued by the federal government, contact mortgage servicer to determine what assistance is available. So it's quite possible that your mortgage servicer will give you a break, will work with you. You want to contact them to see what service is available. You want to carefully read the terms of the agreement. So in case your mortgage servicer is giving you a break, you want to make sure that the missing payments do not balloon, but are added to the end of the schedule. So what that means is, let's say the mortgage servicer is going to give you a break for 6 months or 12 months. You don't have to make those loan repayments. Just make sure that those missing payments are added to the loan payment. And at the end of the 6-month period, you don't owe them those loan payments all in one big payment, all right, a balloon payment. And you want to make sure of that. Again, read the terms of the agreement. That's very important. All right. So I talked about the CARES Act, some of the repercussions of the CARES Act, some of the things to watch for. The rest of this presentation, I'm just going to give you some slides. I give a financial fitness presentation at some libraries, some school districts I work with. So I'm going to take some of those slides that I think are especially relevant to the current situation, the current climate, and talk about that for the rest of tonight's workshop. I think it's very important to have a budget, a monthly budget, okay? Monthly budget is going to allow you to record all these sources of monthly income and expenses. This does not have to be done on a fancy computer program. Just write down a piece of paper every month. We're coming to the 1st May, so I think now's a good time to start a monthly budget. Have the expenses, the sources of income on the left, your expenses on the right. You want to write down all the expenses, not just the big ones, but all the ones, even the little ones. And then you want to challenge those expenses. Maybe there's some expenses that are a little extravagant that can be cut down or eliminated. I will bring up Starbucks coffee. I am not a Starbucks person. I'm not a coffee person. But it seems a lot of people drink Starbucks coffee. It's very expensive to me. Maybe there's a way to cut down on Starbucks, use an alternative. All right. The idea of creating a budget is to write down all your expenses, challenge those expenses, challenge the ones that might be a little extravagant. Maybe we can eliminate them or certainly reduce them at this time. People accumulate wealth by spending less than what comes in by way of wages, interest, etc. It's a fairly simple concept, difficult to apply. But the way you accumulate wealth is by spending less than what comes in. And the way you do that is by challenging your expenses. Credit cards, most credit card issuers these days are offering assistance to their clients by suspending required payments and waiving interest fees. This is not automatic, however. So it's kind of like those mortgage loans we talked about issued by the private mortgage companies. You want to contact your credit card representative, explain your situation, see if they will work with you. I've been told that American Express and Capital One credit card issuers are especially accommodating these days, but it's up to you to step up, contact them and say, listen, is there something we can do? Can we suspend this month's payment, next month's payment? You know, you want to work with them, you want to step up, contact them, be assertive when it comes to this. Don't assume they will do it for you. All right. Credit cards, just generally in credit cards, use the credit cards for things that you would buy anyway, groceries, not big purchases. You don't want to put a big purchase on a credit card. You want to save for that credit card. You want to budget for that big purchase, whether it's a vacation or a new car. Don't put it on a credit card. Use a rewards program or use a credit card program with a rewards program that fits your spending habits. All right, so if you have a credit card that gives you extra airline miles, it doesn't really mean a lot if you don't travel. So, all right, so try to find a credit card with a rewards program that fits your spending habits. Don't use a credit card for medical expenses. Why? Because the healthcare provider will usually find a way to work with you so you don't have to use a credit card, whether it's installments or whatever. So you don't want to use a credit card to pay for medical expenses. The most important thing with every credit card, pay the balance every month. You don't want to have the interest charge accumulate over and over. Why? Because the interest charges on a credit card, very expensive, very expensive. So you want to make sure you pay that balance at the end of every month. Okay, if you can get one thing from my presentation tonight, this should be it. You want to work on establishing an emergency fund. If you're in a position now where you're having a difficult, fine, put it off. But when you get back on your feet, when you get back financially, you want to work on having an emergency fund. I can't stress how important it is. Again, you get one thing from my class tonight. It's to work on establishing an emergency fund. Emergency fund should be at least 3 months worth of expenses. If you can get up to 6 months, that's terrific. But try to have an emergency fund that covers 3 months of your daily expenses. Food, utilities, rent, mortgage, whatever it is. 3 months worth of your expenses should be covered by an emergency fund. Emergency fund should be maintained at a bank. Don't keep emergency funds in a mattress or at someplace at home where it's easily accessible. You can just reach in, grab your emergency fund for a night out on a town or a fancy dinner. You want to have the emergency fund kept at a bank. You want to make sure that check writing and debit card accessibility. If you really need that emergency fund on a weekend or a late night, you can get hold of it through a debit card, all right? Having cash on hand allows a person to avoid borrowing. And again, borrowing is going to put you into a deeper and deeper financial hole. So you want to have an emergency fund. Again, I can't stress this enough. If you get one thing from my class tonight, work on setting up an emergency fund. If you can't do it now, fine, I understand that. Once you get back on your feet, start having an emergency fund. 3 to 6 months worth of expenses, having a having a debit card, accessibility is very, very important. I am a big, big fan of setting goals. Setting goals, financial goals, career goals, health goals, whatever it is, set goals. You want to set the goals annually at the beginning of each month, pursue them and review them at the end of the year. What was my goal? Identify it, write it down. At the end of the year, review those goals, see if you have achieved those goals, and if you haven't achieved them, why haven't you achieved the goals? A big objective should be ambitious enough to motivate, but not too high that it's unattainable. So if your goal is to play center field for the New York Yankees, maybe that's too high in a goal, too high to reach that goal, unattainable to reach that goal. Again, the objective should be ambitious enough to motivate, not too high that it can't be reached. Goals should be identified in print, a reason for that goal. Again, you want to write down your goals, identify them, and write them down. All right. Examples of goals, financial goals, I think are feasible goals. Saving $100 per month, that's a goal. Getting out of debt, that's a feasible goal, financial goal. Winning the lottery is not a goal, all right? Winning the lottery is by chance, by luck. It's not a goal. It's not going to do anything that you strive for, that you reach for. The idea of having goal is to, the whole idea, the objective is the pursuit of goals is to lead to improvement in daily habits. And what do I mean by that? If you really want to achieve the goal, it's going to take motivation, it's going to take work on your part, effort, and it's going to take improvements in your daily habits. So let's say your goal is to save $100 per month. Well, you can try to scrounge up for that $100 at the end of the month. We're at the end of April, so maybe if your goal was to save $100 for the month of April, well, now you have $3 to reach that, 3 days to reach that goal. The better thing to do would have been to start on April 1st and set aside $2 or $3 each day. $2 or $3 maybe to cut down on that Starbucks coffee or whatever it is. Again, the idea of goals is to improve your daily habits. All right, so with all the extra money going out there, the government giving people aid, assistance, there's been a lot of fraud, cases of fraud, instances of fraud. The best way to protect yourself against fraud is to be skeptical of anyone offering help. So if someone's coming to you door to door, asking, giving you help, providing help, asking for assistance, be very skeptical of that person. At the current time, there are no FDA-approved treatments or vaccines. So if somebody's coming to you, calling you up on the phone, coming to your front door saying, I have an FDA-approved vaccine or treatment, I will give it to you. This is what it's going to cost you. Again, be very skeptical. At the time, there's no FDA-approved treatments. The IRS will not call you asking to provide or confirm banking information. The IRS, Social Security, federal government does not call you asking for information. They do things by letter, by United States Postal Service. So if you get a phone call from somebody saying they're calling from the IRS, they're calling from Social Security, we need banking information in order to get you your stimulus payment. You should hang up the phone right then and there. Again, the IRS, Social Security, that's not the way they do things. They will send letters. They never ask for information over the phone. And anyone going door to door offering tests in exchange for personal details like Medicare information, banking information, again, not to be trusted. So in this day and age when there's a lot of extra assistance out there, there's also a lot of people, unfortunately, who want to take advantage of people who are not that sophisticated, who are vulnerable. You want to protect yourself, be skeptical of anyone offering help. All right, we're going to talk about some investment terms, some investment things, people who have investments now. One of the things I think is a good time for people to do is to rebalance their portfolio. What that means is when you start working with a financial advisor, or if you're doing things on your own, what you want to do is you want to establish target weighting. If you in your portfolio you say, oh, okay, I'm going to put 80% of my money in the stock market, keep the rest in cash and bonds, 20% in bonds, 20% in cash. Again, at the beginning of the engagement, establish a target weighting. When the allocation drifts from the target weighting, you want to rebalance. Okay, so right now, it's very likely that your target weighting for stocks is below the 80%, the 60%, whatever that target weighting was that you established at the beginning. It's a good chance, I would suggest, that it's below that target weighting. Now is a good chance to rebalance, take money from the bonds, take money from the cash, whatever you have, put it back into the stocks. Establish the target weighting. You want to keep that target weighting. If you follow this rebalancing strictly, it forces investor to buy low and sell high, and that's the way you become a successful investor, by following that mantra. The people out there who are successful investors buy low. They're buying at this time. When everyone's selling, they're buying. So right now, a successful investor is rebalancing, taking from the portion of the portfolio that's maybe above the target weighting and putting in something in below. If you do this, I can't promise you that you'll make money overnight, but in a year from now, and 18 months from now, you'll be happy that you did. Again, the people who are successful when it comes to investing are buying when the market is low, and they're rebalancing at these kind of during these kind of situations. There's a lot of noise out there, whether it's from people making predictions about how long the coronavirus situation is going to last, till what treatments are out there, till what's happening with the stock market. There's a lot of noise out there. And noise is anything that distracts you from rational thinking and long-term goals. So I want to talk about noise when it comes to the stock market. Noise is anything that in the news, there's a saying that if it bleeds, it leads. If you watch the news these days, every story is related to the coronavirus, and most likely it has a negative tone to it, negative tenor. So you want to be wary of that. Try not to watch the news too much. It's very depressing. It's only going to make things worse. Don't watch the news too much. Don't watch your brokerage accounts. Again, people who are checking their brokerage accounts online, who have online access, who are checking all the time, they're going to get nervous. They're going to make bad decisions, all right? So try not to check your brokerage accounts too much. Try not to watch the news. Try not to watch CNBC, where you have people coming on making these outrageous predictions about the stock market falling another 20 or 30 or 50%. They don't know any more than you do. So they're just they want to get on TV, make a name for themselves. They're willing to make these outrageous predictions. Nobody's going to call them on it in a year from now. All right, so be wary of being distracted from your long-term goals by noise. And I always recommend to people, there's no law that says you have to look at your brokerage statements. So if you think the brokerage statement is going to be bad for that month, or it certainly was bad for April, we might see a recovery for May. April, there's no reason why you have to look at your brokerage accounts. Just toss them aside before you even get a chance to see what they're all about. I want to close the presentation tonight with a couple of slides about Social Security. Then I'm going to answer any questions people might have. Social Security offices are now closed. So if you're in a position where you want to claim Social Security You're not going to be able to go down to the local office. You might try them on the telephone, but there's a good chance, just like unemployment, you're not going to be able to get through. So what you want to do is you want to go online, set up an online account, socialsecurity.gov/my-account. You'll be able to open up an online account, and then you'll be able to apply for benefits. All right, so these are for people who want to get Social Security, can't get through to the on telephone, the offices are closed. Very simple, open up an online account, socialsecurity.gov/my-account. Shouldn't take more than 15 or 20 minutes, and then you'll be able to claim your benefits online. A little bit more about Social Security. Social Security may be claimed as early as 62. There's a lot of people, again, financial situation, they may be inclined to Social Security, claim their Social Security benefit now. I would encourage people to delay claiming Social Security as long as you can. If you need the money, well, that's fine. But if you have other sources of income, a bank account, whatever it is, try to use that first. Don't take the Social Security. Why? Each year you delay Social Security from 62 through 66. It goes up by 5 or 6% annually. Each year it's delayed after age 66 through 70. It's increased by 8%. So I'm a big fan of delaying Social Security as long as you can. Look at these increases. All right, where else are you getting a 5, 6, 8% increase annually guaranteed rate of return? You're not. You're going to have to go out and take some risk. And anybody who's invested in the stock market knows how risky those returns can be, all right? So I'm a big fan of delaying Social Security as long as you can. If you have to take it, take it. One more slide. There is a claiming strategy. Recently, unemployment individual claims Social Security. Within a year, he finds a job. He can withdraw his claim and repay the amount, okay? So think of it this way. It's kind of a do-over with Social Security. If you apply within 1 year, you can withdraw the claim. You have to pay the money back. But if you do this, it's almost as like you didn't take it, and then you can start over again at a later date. So think of it as a do-over. You take it, you're only allowed to do this once per lifetime, and it must be done within 12 months of the initial claiming date. But again, you can apply for Social Security, take it, as long as a year has not passed, you can withdraw the claim, put the money back, and it's though it's never happened, and then you can reapply at a later date. All right, here is my information. I'm going to open it up to questions. I'll answer as many questions as I can, but please feel free to contact me directly. Here's my telephone, there's my website, and there is my email address. Thank you very much.